Warm welcome to the second day and the third session of the Green Growth Forum here in Lahti. In this session, we will focus on sustainable investing in Finland and the Nordics. In following presentations, the three key players in the investing ecosystem will discuss the insights, each from their own perspective. My name is Unna Lehtipuu and I'm moderating this session. Once more, warmly welcome to join us here. And as a reminder, so you can also watch yesterday's keynote speeches online on the event platform. And now, all three speakers are here live on stage in Lahti, the European Green Capital 2021. I have to remind about this. And our first speaker, Mr. Antti Kontio, comes from Munifin. Welcome, Antti. He will highlight some actions by Finnish municipalities in achieving climate goals and the role of green and social bonds. Second, Mr. Tuomas Virtala from OP Finland. Welcome, Tuomas. He will share some really interesting observations around sustainable investing when it comes to statistics. He will also grasp the differences between different types of investors. And finally, Ulrika Hasselgren from Infranode. Ulrika will give us an overview of the latest trends in the sustainable investing and an introduction to the ESG framework that Infranode has developed during the last 10 years. So, interesting insights to come. Please, Antti, the floor is yours.
Well, thank you very much, Unna, and also many thanks to the City of Lahti, first of all, for organizing this event today. And it's great that Lahti is a forerunner, being the European Green Capital this year. But I'm also very excited to be here today because this is my first business trip in almost 2 years. So I guess we can all share that. It's great that the world is moving into the right direction. Today, I'm planning to talk about the growing need of green bonds and social bonds from both the local and the global perspectives. And I want to highlight this fact because I think that what is done in the municipalities, for example, will have a huge impact because when we sell the bonds to the international investors, it becomes global. So the chain is extremely important. And another topic I'm going to concentrate today is the investor side. So what we have seen on the investor side, what is happening in the sustainable bond market as of today. And in between, I will talk about Munifin and our approach to this topic. But if we start from the municipality side, and I think this picture here quite clearly shows the chain. So what are the roles of international cooperation, the governments, and then going down to the local level? Of course, the municipalities, they do have a very big impact in this whole picture, but we also have the businesses, the academia, and the NGOs. If we start from the international side, as we all know, Paris Agreement and 1.5 degrees alignment is very important. We also have the EU Green Deal in place. As we have heard in this seminar, it's a huge initiative which wants to make Europe climate neutral by 2050. But then if we go to the lower level, Finland, so what is Finland as a government doing at the moment? I guess quite a lot. Finland has set a very, I would say, ambitious target to be carbon neutral by 2035. If I understood correctly, Finland is going to be the first country in the world to achieve this neutrality. And this is, I think it's very remarkable. And of course, it will be very nice to see if we will be able to reach that target. But at least it's extremely ambitious. And then moving on to municipalities, and as you know, Munifin is the largest provider of financing to this sector. So I want to spend a few moments here just talking about this approach. So what can the municipalities do? So they can take action in various ways, as you can see here. The most important point for the municipalities is to have a clear strategy in place. So, for example, a climate strategy, what we want to achieve. And then they also need to have targets in place. They need to have goals that can be measured. So, for example, they want to reduce CO2, this and this amount. I think that makes this whole picture very clear. We have also seen very good initiatives in the municipal sector. For example, Hinku network, which is the carbon neutral network in Finland. Already more than 2 million people in Finland are living in these Hinku municipalities. But still we have more than 3 million people who are not. So this is just giving the picture that there needs to be work done. And I think the Finnish Innovation Fund, Sitra, they have made excellent job in this field, and they came up with a study this spring saying that roughly 200 out of the 300 municipalities in Finland currently have a climate goal in place. So it means that 100 municipalities don't have a climate goal. We at Munifin, of course, we would encourage all the municipalities to join this party, because we can only see this is a one-way route. And basically what the municipalities then can do when it comes to climate change, they have quite a big arsenal, including, for example, energy production, real estate, transportation, land use, and many others. And investments made to green transitions, they can be massive and expensive, we do understand that. But they also can have a significant cost-saving potential. And in the end, they can also help the creation of jobs and improve the vitality in the municipalities. And I'm not going to continue more about the businesses and academia and NGOs, but I will move on to Munifin very briefly, talk about our approach. And we feel that Munifin is very much in the center of all this, because we do have a very big impact into the Finnish society through the funding that we provide for our customer base. And currently we have two sustainable products in place that you can see here. It's the green finance and the social finance. We started with the green finance back in 2016, so it's roughly 5 years ago, and with the social finance last year, so in 2020. And you can see the outstanding amount. So we have roughly 3 billion euros outstanding of that finance. So in the Finnish context, I would say it is already a big amount. But then, of course, we need to remember that the lending portfolio is more than 25 billion euros currently. So we are still talking about a small amount. But we do have an internal goal to grow this number. So we do have a goal to reach 20% from the lending portfolio for social and green by 2024. And we are currently at roughly a bit less than 10%. So there is still something to be done. Another topic I wanted to raise here is the importance of ESG ratings. We have heard very good discussion around this topic in this seminar as well. And this is something that we have been very much focusing on in the last few years, and especially in last year. So we have seen the importance of these ratings for investors, and it's something that we want to really much improve. But we're also integrating that approach to our customer work. So we are integrating an ESG rating for each of the municipality to look at their ESG work. And then basically a high score means that there is a lower ESG risk in the municipality, and ultimately it will of course have a lower risk component in our customer approach. Well, then I will move on very quickly, show you the journey in our funding side. So we do have green bonds outstanding, 5 of those, and then we have 1 social bond in place. And going forward, we do have a goal to issue at least 1 green per year and 1 social. So meaning at least 1 billion euros going to green and social per year. And I think this is very nice and would be, of course, nice to do more. However, sometimes we do have challenges in finding the projects, the high-quality projects. So it would make life easier if there would be more very good projects in place. And then this is my last page in this presentation. I wanted to very quickly show the development in the sustainable bond market. I think all this is very clear for everyone that the market is booming. I think what has come as a small surprise is that the kind of pace, how quickly everything has happened. And for example, if you look only 2 years back, 2019, in the whole year, the amount of green bond issuance was roughly a bit more than 200 billion US dollars. And now this year we are already at 300 billion as the end of August. So it just shows how much more there is all the time coming green bonds. And what is interesting here as well is if you look in the middle, you can see that social bonds, still 2 years ago, it was zero. And this year, altogether, it's been 150 billion already. So that's a big jump. And the same language speaks here, the sustainability bonds, which are a combination of green and social. And if you look on the right side, you can see the investor breakdown in our green bonds. I want to mark here that the two most important investors for us in these fields are bank treasuries, together with the central banks and official institutions. And I think it's very interesting to see central banks also joining this party because, for example, 5 years ago, the central banks, they didn't talk too much about the climate change and buying green bonds, especially when there is a greenium perhaps in place. But now, I think in almost all the investor meetings with the central banks that we have around the world, we always talk about sustainability issues, and increasingly they are becoming interested about this topic. So finally, if you look at the last bullet point here, I think the sustainable bonds, they will improve transparency and dialogue between issuers and investors. And what will be key here is the reporting. So impact reports will be in the center of everything. And I guess the EU taxonomy, the Green Bond Standard, it all goes to the fact that we need to be able to provide a lot of information about the projects, very detailed information about the projects. And that is always not very clear. It's not done very easily when the customers perhaps don't have the data in place or something like that. So that's going to be a challenge in the future, but we do see that that's where the market is slowly going. But I will stop here. I think I've taken my 10 minutes or maybe 12 minutes. Apologies for that. And yeah, I'll leave the floor for the next one. Thank you.
All right. So I promised statistics. I promised many other things, and then when I started to think about this this topic, the statistics don't really help. But I have something, and also I will comment on the differences between institutional investors and then private investors. But like Atte said, great to be here. My first business trip as well, all the way from Espoo to Lahti. That's 100 kilometers away from home. Great to be here. Took out my suit as well. So this topic, I will be using my freshly disinfected clicker here. This topic is really interesting. It made me kind of reflect on my own past, and then somehow try to relate it to the industry and what's been going on in the industry regarding this sustainable investing development over the last 22 years or so. And that's surprisingly coincidentally. 99 is a year when I started in the industry, and that's also the first year I was aware of anything like this. And that's the first, to my understanding, the first specific fund that was launched in the Finnish market to address the first version of sustainable investing, which was ethical investing at the time. So If the slides look like they were made by myself, yes, you are true. And I think I need to comment on the evolutionary picture here. In the modern times, yes, it's a man coming from the ape, and this is the evolution of sustainable investing in the investment industry. And there also was a similar picture regarding or showing a female, but that didn't work as well because for some reason they grew shorter with evolution, and that somehow has to do with fertility, and it's better that we grow taller as people within sustainability. So the first thing that kind of is clear is that this sustainable investing and all the things around it is a new thing. It's untested, like people here have been saying before. The theory is all over the place, the data is all over the place. It's really difficult to use the Homo economicus brain to understand how should we do about this. So that's the starting point. We start with risk and we start with return, and we have a kind of a common understanding with investors, asset managers, and the industry on how to do about it. And then the first thing that came out, maybe in the late 90s, is ethical investing. Someone decided that, okay, we do not actually want to invest in tobacco, firearms, gambling and adult entertainment. That's not according to our set of values. And these investors typically were maybe churches, communities, and things like that. And that also happened in this market. Really easy for investment professionals to say that and accept that. Okay, let's set up a fund that just excludes all that stuff. And then the portfolio managers really don't have to do anything differently compared to before. And then it evolved into norm-based screening, still negative screening based on, for example, the UN norms, a little bit wider set of exclusions, but it's still the same thing. No need to really change anything in anyone's thinking. Just go with the demand, and that's by the way what asset managers always need to do. We are dealing with other people's money, and we need to manage that money according to the need and will of our clients in a smart way, of course. But that's one of the I think the key elements in this industry and the evolution of sustainable investing. So then it evolved. There were first a few fearless people who had a view from the investor side and also asset manager side, but then it started to get traction. Private clients were also interested in this, and it evolved into responsible investing, ESG, sustainable investing. There was positive screening coming up, and the fund that I mentioned before, that really started with a typical negative screening, and then we decided, okay, positive screening is better. We appointed an external manager to do that, but our clients still wanted to hang on to the negative screening of firearms, tobacco, alcohol, and adult entertainment, and this management company, it was a difficult discussion because they were doing positive screening and didn't care about negative screening. But at the end of the day, we were able to agree that, okay, they will continue with the negative screening, and the logic was that, okay, so we would not invest in tobacco anyway because we don't invest in companies that kill their clients. So that was that, but it was strange at the time, even to me. So that time was again, okay, so there's demand, the industry has developed like this. Let's develop thematic funds and also appoint ESG experts, a couple of portfolio managers doing specifically that stuff, and then maybe a team of ESG experts helping to analyze, but still an external function compared to the core business, clearly, I think. So the next stage was such that there were all kinds of initiatives, principles coming up, and a lot of analysis behind that. We've heard about those analyses today as well. There was Sustainalytics here, and the likes of UNPRI, FinCIF or CIFs in any country, so to say, came up, and different kinds of other kinds of principles that asset managers went in and signed because that also was the demand from the clients. And again, the behavior is that, fine, okay, there's this, yes, the principles are fine. We want you to follow these principles so that we are home free as well as investors, right? And this is I think, what really happened in the early stages of that development. But it helped in developing all kinds of analysis and reports, data management, and really kind of set the scene for the next level to understand more profoundly what's going on. And now I think we are between the guy with the spear and the suit guy in terms of sustainability. So we are going towards sustainability being a part of strategic decision making in asset managers functions, in investors functions. For sure, private clients are embracing sustainability. According to our studies a couple of years ago, it was about maybe 20-25% that acknowledged sustainability as something worthwhile thinking. This year we made a study, it's 40% who want to have sustainability as a key component of their decision making. So that's a big development, and we are going that way. And of course, regulation kicking in, a deeper understanding, making it possible to actually go about this in a smarter way than ever before. And we were talking about taxonomy here and other kinds of regulations. Impact investing is something that is able to combine real effects from a sustainability point of view. Pretty typically, it's about the environment, but it's also about gender equality, employment, and that's normally been done through private equity investments or directly into different kinds of projects, and those do have an impact, and they also produce good returns. So that's what we want to find as an industry, something that has real effect and also generates healthy returns. Integration begins. This means that we are no longer happy with kind of an external team of people, experts within the investment organization or the organization as such. People need to start to understand more. It needs to be integrated in all kinds of functions and portfolio management processes in different investors organizations. So this is where we're going. And like I said, between the spear guy and the one with the maybe that's a calculator or a mobile phone. So where we are now, I think there's a clear balance shift from demand-driven, reactive actions towards proactive decision making, and there are push factors. And by push factors, I mean that there are things that make the industry still react. And investor objectives, demands, expectations are clearly they are ever changing. They are heavier, more demanding by almost by the hour. Like I gave an example regarding the private clients and institutional investors. They have always been more, let's say, theoretical, academic in a sense. But that is also a good help because it makes us all make sure that we are doing and understanding what we are doing in the right way. We have started doing client research based on these findings to find out what the real sustainability demands and likings are. What should we do with the clients? That's already proactive, and then all kinds of other analytics are clearly coming in to help in understanding, making sense of the whole thing. Push factors, again, regulatory developments. I've listed the stuff there. Now, one of the problems on that side is that they are not correlated. They are unsynchronized. It seems like they have been invented in different kinds of teams, and then plop, they have been popping up as demands to the industry. And now I think what should be done with regulation is to synchronize, to standardize, in order to avoid us from having the pressure to go ahead and buy all the data in the world from different kinds of ratings agencies to make sure that we are not missing something. And this is, I'm sure it's coming. And I think this regulatory development is actually a big thing in the current balance shift. It's a good thing. It will help in standardization. For example, taxonomy, green funds and dark green funds, and then the rest. It's not yet clear how it works, but it will be, and the industry has kind of taken it, and we still think that okay, it's unclear. We need to be careful in order to not to greenwash. But if we are sure that a given fund is dark green, meaning clearly targeting beneficial outcomes to the environment, then probably it's going to be okay, even after the regulators come about and figure out the rules for that. And the same thing in the lighter green. So we are being, as an industry, we are being maybe conservative still, but we are going there. Now, then the pull factors, board level focus, I think it's everywhere. There was a BlackRock representative here today, and we've been reading from the news regarding BlackRock and Larry Fink being very, very proactive and even loud when it comes to sustainable investing. And that's one visible example of that. But surely at OP we are talking about that corporate-wide and especially in asset management, because asset management has been around for long when it comes to sustainable investing, and now we are in my opinion in a situation where we can take the next leap, so to say. We must be a part of the solution. I mean, find out real things that can help first the environment, and then after that, all the other important issues when it comes to sustainability. What can we do more is a question that we are asking ourselves. And when the industry starts asking these questions from itself and is determined to find answers, they will come. That's pretty sure. That's been seen quite a few times. Now, the fourth thing I think is also important is that the personnel in investment organizations is increasingly demanding more focus on this. They are typically a bit younger than the management. They view the world differently. They are very, very ready to embrace this. For example, our example is that when we have started integrating sustainability into our functions, which means that it has to be through the organization. And then we were asking for volunteers to learn about this and take on a little bit more responsibility and also work in order to make this happen. We had immediately something like 15 to 20 hands from different kinds of teams, and that was great, and I think it's continuing. And of course, one concrete thing, even if you don't believe in all of that stuff, then you should believe that it will be a key criteria for choosing who to work for going forward. And that if you don't have the best employees, then you're in trouble, for sure. Okay, the future. Yeah, there was statistics, can you see that? 35 trillion USD, that's 12 zeros, right? You know it better. Yes. In ESG AUM, and expected growth rate is 35% per annum. And that's a lot. Going forward, the same analysis in as soon as 2025 is 50 trillion in USD. And that's based on the same developments that I just described. So we have more flow, more demand for that stuff. We have new products that are developed to cater for the different new needs and existing needs. And also we reclassify existing funds into ESG. If that means that we need to fine tune or somehow change the processes, then we'll do it. But it's from three sources, and it'll be a huge amount of money that will follow some sort of a sustainable investment philosophy going forward. It will grow. But I think what the interesting thing now is that this is really soft and fluffy and not good for bankers, but so it is. This IPCC report, and I've written PICC, but IPCC report, the latest one. And that I think has made a difference. According to, well, I can somehow feel it in myself, but also when discussing with people from the industry, be it Finnish or abroad, the same thing kind of strikes out, is that this is not somehow taken more seriously. I think that the industry now is ready for the next leap to really go about it and decide that, okay, we need to do something about this, and we will do something about this. So the readiness is there. And we will be the part of the solution, and this net zero discussion, 2035 Finland, I think that's a stretch. We will go for 2050 at OP, but we also will set a clear milestones to how to get there. And what we will also say, we haven't said that this yet, but we will, so you're the first audience. What we will also say that it's 2050 the latest. And that's something that I would kind of like for people to think about and go for. So 2050, that's a long time. That's far away, and I'm still thinking that too many are thinking that, okay, so to 2050, maybe in 2040 I will do something about it. and hope that the rest of the industry and all the companies will do their shares so they don't have to do anything. But 2050, the latest, and hopefully before that, and we are working on finding ways to take that time frame to an earlier stage. And it requires rethinking. It really requires full integration of this topic into the activities. And if we used to have risk and return as the key components of decision making, I'm pretty sure that this is a third dimension for some time until it becomes the norm. Then it goes away, and it's just one part of the analysis, like macroeconomic analysis. But going forward for the next I don't know, 10, even 15 years, it'll be a third dimension. A little bit like Solvency II is for insurance companies, and they will have 4 dimensions. And that's going to be fun with them. And we will invest in personnel, in education. We will, in that sense, be okay with maybe a lower return or a higher cost incorporated in this activity. And the next thing also is that we will start focusing on things that are not only climate, because that's only one part of it. It's the most important part right now, but the other things are important too. And the EU regulation, I think that it already has set up a plan on how to go about the rest of the critical stuff, the social and the governance issues. But right now, focusing more on climate than the other things that are also important. And that's also helpful for people who think like investors, who need clarity and focus. So focusing on one thing first will help. But we all have to do our part, and greetings for the regulators. Please go about making synchronized regulation and also standardized regulation so that it's easier for the rest of us to make a difference here. Thank you. Welcome, Ulrika. This is one area where surely clear and direct impact can happen. Infrastructure, right?
We hope so. Thank you. Thank you very much. Okay, that's it. Great. So, excellent. It's great to be here in Lahti today and to participate at the Green Growth Forum. I'm really delighted, actually, to meet people for real. So great to be here. And I also like to share some thoughts on sustainable investment within the scope of Nordic infrastructure. So I am I'm also happy to represent Infranode, a Nordic infrastructure company with a 25-year investment horizon, to whom I'm grateful to serve as a senior advisor. And otherwise, I'm a partner at Arabesque, which is a sustainability technology company who provides sustainable asset management, ESG data, and new technology tools to support sustainable companies, sustainable finance, and sustainable investments. So I was happy to hear that Tuomas, you entered this industry in '99. So at some point we should compare notes, because I've also been in this industry since '99, and I've had the opportunity to work with many large and small public and private institutional investors and asset managers, sort of helping to navigate this evolving landscape of sustainable, responsible, and ethical investing and financing. And today, clearly, sustainability is on the rise. And let's see if we can do that. Yeah, there we go. So what I'd like to share with you as an introduction, also touching upon what Tuomas shared, is that we see, of course, a huge growth in the number of sustainable investment funds. This year, ESG funds accounted for some 24% of the total fund inflows so far this year. This is up 11% since 2018. And the PRI has seen assets under management inflows to grow more than $103 trillion in 2020. And the market for ESG data has reached $1 billion, which is a 20% growth per annum. We also can see that sustainable finance policy and regulation are increasing, and we've heard this from all of the speakers this morning. And I think that across the world, the 50 largest economies, there have been more than 730 policy revisions across some 500 plus policy instruments, which support or require investors to consider ESG considerations. And of these 50 large economies, 48 of them have some form of policy designed to help investors consider ESG and from a risk perspective, from opportunities and outcome. Third point, momentum towards net zero targets is growing. We hear about net zero strategies, about targets, almost on a daily basis today. And I think that the number of corporate net zero targets has tripled to some 500 in 2019 to more than 1,500 as of last year. And looking at the largest financial institutions, there are more than 160 of them with over $70 trillion in assets. They have committed to align their lending and their investment portfolios with net zero emissions by 2050. And of course, an increasing number of countries around the world with major economies have pledged net zero targets. Now, this rise, I think we all agree, it's driven by investor commitment, regulation, and real economy change. And public and societal awareness is high on the agenda. So I think that in this industry and in this growth, no surprise, this growth brings challenges as well. And I just want to touch upon two of them. ESG data being an obvious one, which many of us have discussed today. And I think there is the huge volumes of data. So there's high quantity, while the quality can be questioned, and the usefulness to investors. There is lack of standards, and there is biased information. There's also slow reporting, and there is greenwashing. So one solution to this ESG data challenge is to bring together technology, data, and finance to deliver sustainable and transparent solutions for a changing world. And the other challenge in this growth is that a solution to sustainable investment with real impact I believe, is to build partnerships that includes flexible ownership, long-term and sustainable business models, deep expertise, and value to society. And this is actually what Infranode seeks to achieve. So, Infranode, it's a Nordic company that invests long-term in essential Nordic infrastructure within 4 areas: transportation, energy, digital infrastructure, and social infrastructure. And no matter the sector, it is critical for Infranode to make a thorough assessment of the long-term viability, essentiality, and hence the sustainability of any specific investment to enable fulfillment of Infranode's long-term investment strategy. Now, what is long-term, you may ask? Well, for Infranode, this is at least 25 years. And as such, Infranode is a reliable partner long-term to both the private and the public sectors, focusing on releasing value that allows you to invest in your community where it is most needed. So with this long investment horizon and focus on stable, predictable returns, a proper understanding and analysis of sustainability is core to the investment philosophy. So Infranode operates 2 funds with assets under management of 1.7 billion euro. The second fund was closed this year, and 1 billion euro is available for new investments in long-term essential infrastructure. So, as you can see on this slide, Infranode's investors include pension funds and institutions such as Keva and Lehtipuu here in Finland, and Folksam and KPA Pension in Sweden, as well as the European Investment Bank. And the EU invests in Infranode through the AIB to support the Nordic region financially and to fulfill its main objective of improving people's living standards and secure a sustainable development. There we go. I would like to share a little bit on the practical side regarding Infranode's long-term value creation model in partnerships. So when investing long-term, for Infranode, ESG factors are a necessity to incorporate to the investment thesis in order to future-proof investments. So Infranode has, for more than 10 years, implemented and actioned a model to incorporate and integrate environmental, social, and governance factors into each step of its investment process. So the first step, screening. Infranode starts by setting a framework of ESG standards that each investment opportunity needs to fulfill to begin with. And the second step is the due diligence, where each investment opportunity is diligenced in order to identify potential gaps and opportunities to improve ESG features of the investment opportunity. The third step is the documentation. So items that are identified in the due diligence are incorporated to a long-term business plan, which is developed together with the co-owners. And the fourth step, goal setting. This is where Infranode's ESG and asset management team focuses on the long-term value creation through planning and engagement, and where Infranode and the co-owners supports the company and its management together to build a strong business model. And the last step, which is an iterative step in this process, is the monitoring. And the only way to secure stable and long-term return is to plan for the challenges of the future, by making sure sustainability is at the core of the business development. So Infranode aligns its plans and efforts together with the co-owners and keep an ongoing dialogue. And with this model, I'd like to share just quickly 2 examples where Infranode has deployed this model in Finland. And for everyone in Finland, these are known names: Loiste and Vantaan Energia Keski Uusimaa. Infranode is currently a co-owner of these 2 energy assets alongside local municipal stakeholders. And these companies, they are being developed together with the co-owners for the benefit of all stakeholders, including the municipal co-owners and local citizens. So Infranode's ESG model fits very well with the co-owners, as Infranode is a long-term investor and have a sober and realistic view of the future. So to conclude, As a long-term investor, Infranode is fully committed to continue to improve the sustainability and the ESG performance of each of the portfolio companies in order to secure long-term competitiveness and license to operate, and to contribute to real positive impact for the company, for the owners, and for society. And by that, I'd like to say thank you, but I also just want to show you pictures of two of my Infranode colleagues, and of course, Nika Limatainen is here in Finland, and Johan Tiselius is in Sweden. Thank you very much.
Thank you so much for all of our fantastic speakers here. We'll continue a short moment here together on stage. According to a study, members of Generation Z are willing to pay 50 to 100% more for a product if they know it comes from a sustainable company. Do you see the same trend in your business or even share prices of bonds already? How far are we ready to go?
Well, I'll begin. The green bond market, that has been strange. I mean, it seems like people are willing to pay more for the same stuff if it's somehow sustainable. Like green bonds are clearly directed to something that will produce green growth. Let's go like that. But I guess the main reason is that the asset management industry has been really quick in setting up green bond funds that have the rules to only invest in green bonds because that's apparently what the investors want. And then they have gotten inflows, and there's so much money in those funds and they have to buy these green bonds that haven't been around for that much. So they have been a scarce resource in a sense. This is pushing up prices, and I see this pushing up share prices, bond prices more generally as well, because the kind of the demand for sustainable investments is there, and assets are directed to that by quite a lot. So it seems like sustainable investment indices funds have been doing better than the standard funds, but part of the reason is that because the assets are channeled to a smaller number of companies or investments, they are pushing up prices a little bit. And I guess that's accepted then, because people are still investing in those. The other approach is that, of course, we've done studies. A couple of years ago, people were not interested in paying a higher fee, for example, for a sustainable fund, or accepting a lower return on such a fund. But today, it's a bit different. I mean, there are first signs of willingness to pay a little bit more and maybe even accept a smaller return if it's somehow based on something bigger and meaningful. And also one issue is that I think it's already a proven fact that those companies who are good in sustainability, they're also better quality, so lower risk, and then therefore the risk to return actually is on a more balanced than one would think, even though the returns are lower. A long answer, but yes and no.
Yes and no. Antti, how about?
Yeah, I could continue here as well, and I guess we all know what's happening in the green bond market, and we have seen the greenium in some of the cases, like for Munifin, the existing Euro green bonds that we have in place, they are located below our conventional curve, meaning that there is a small pricing advantage. But I think going forward, the interest is not really on the green side, it's going to be on everything else. So what the company is actually doing on the kind of brown side. I think the ESG rating is the answer to everything. So basically the companies that have a high rating on the ESG side, they will be priced lower. So then in the end, those companies will have pricing advantage as a whole. Then if there will be a difference between the conventional and the green, I don't know. But at least I would say that's the pathway.
I would say that on the question of whether clients are willing to pay more, and with the example that you gave, I think that what we see clearly is that investors ask for more. They expect more from their counterparts, from their asset managers.
For the same price, a higher price.
For the same price, I would say. And as mentioned also, it's not a case of give me more to the cost of lower returns or higher risk. No, more in an investment meaningful way, that I want a good investment and I want to pay reasonable fees, but I don't want the lower performance. So I think it's a question that can be challenged in relation to what are we actually willing to pay for, and for the discussion of ESG and sustainability, the time horizon is very important, because if you know that you buy a product that will over time bring solutions to some of the current challenges that will be very challenging tomorrow, then you might consider waiting for the returns. But I'm not sure you're willing to pay more for it today.
Based on what we've heard today in these presentations here, so it's obvious that sustainable investing, or ESG, is not anymore like hobby of a small or handful of do good investors or morally minded companies. It's more like a mainstream thing nowadays. But what would you rank number one driver for the change? Is it like regulation? Is it climate? Is it just the evolution of our human thinking, or what is it? Trends?
I think it's a combination. I think one of the obvious reasons for the drive is the increased transparency around the world. We know more at a faster speed about what is going on in the world, what goes on in our companies, in our investments, and everything today can be viewed as a risk, right? So it can be a reputational risk that may or may not impact the actual investment, but it may be a reputational risk for my brand. So that reputational risk also drives this industry. Now, the ESG market, as we all know, is a scattered landscape with some information, some data that is investment useful, and some information that may not be. But it's all sort of a big ocean where you need to be able to swim to understand, what's going on. But I think given the transparency and the availability of different data, ratings, etc., this is clearly driving together with real economy change and impacts in the world.
And to understand it all takes good swimming skills.
Absolutely.
Well, yes, I agree. And for institutional investors and asset managers, like I tried to kind of explain in my presentation, it's been more of an external pressure and demand, and then answering the demand. But now I think it's changing, and it's also interesting to figure out where the demand comes from.
So you are saying that investors are not good people only when someone from outside demands them to be.
Well, it's about good or bad. I think everyone is good. It's just about understanding what it means, and the investment industry or investors really rational, not as much as they think, because behavior is there, but still really rational. You need to be able to analyze and justify, and it's about probabilities. And for quite a long, this sustainable thing was dictated by people who had black and white opinions that could not be proven. And now it's different. There are the shades of gray, and for example, the IPCC report, it's drastic. We need to do something. But also, for the first time, at least when I noticed something, is that there was a notion. Okay, this is happening. We need to be able to also cope with it along with trying to slow it down and stop to some extent. And before that report, the things that I heard from the news was that we need to stop it. We need to stop everything in order to stop this, and that's not realistic. But this now, the environment, I think, is realistic, and it's easier to understand and smell the coffee and understand what it actually means to be a good person, also from an investor point of view that used to be kind of isolated from the real life to risk and return only. Again, a long answer. Sorry for this.
Ulrika, Infranode invests in Nordic infrastructure, and what triggers my mind is that you do negotiate with Nordic businesses in Finland and other countries, but do you see any differences between or in the evolution of sustainability between these Nordic countries?
That's a very good question. I think that's a question that can be applied to any topic. I mean, are there cultural differences within the Nordic countries? And of course, the answer is a clear yes. But I also think that we have a long history of knowing each other, collaborating, and working together. And I think that for Nordic infrastructure across the Nordic countries, I think there are similarities in because of the closeness in geography. So challenges with energy, challenges with transportation. That there's a lot of cross-border collaboration, and I think that investors, let's say in Finland and Sweden, as an example, will understand each other very well, also because of the long-term perspective.
Do you want to comment on that? No experiences. Antti, some Finnish municipalities have already got a lot of both domestic or even international recognition for their actions in promoting climate goals. But what are the learnings every city and small village could copy from these pioneers, or even Lahti?
Yeah, I think that's an excellent question. But as I mentioned earlier, I think everything starts from the strategy, from the goals. And when you have a clear strategy in place, it's so easy to advance these projects. If you really put sustainability or environmental topics in the heart of everything that you do, it's going to be so much easier because you have the back from all the people who make the decisions in the municipalities. And I think we have very good examples like Lahti that other municipalities can then copy, see what are the best ways to do things. And this has really improved in the last 5 years a lot.
Would you be willing to give us some examples where to start?
In terms of the projects themselves, or
whatever that pops up in your mind.
Yeah, for example, in Lahti, there are good examples in terms of social housing, for example. That's a very important part of our business. And we have been very happy to finance some of these projects as green, and they are Class A in terms of the energy certificate. So it's clearly in line with the EU taxonomy as well, and that's something that the other municipalities can then copy.
Munifin has financed Tampere Tramway, Suolahti Hockey Arena. What kind of interesting projects are on your list next?
We need to see, but all these projects are very interesting, and I think the transportation as a whole is an important topic. Real estate, of course, because the municipalities, they hold so much buildings. Also energy production, energy efficiency, also water and wastewater management, that's something that's very interesting.
And what is the driver in smaller municipalities or small, not necessarily villages, but small towns that evokes this sense of urge or risk understanding in climate issues?
I think first of all you need to have the resources. So in the small municipalities you may have one person who takes care of the economics, or the economy, but they also take care of the green side or environmental topics. So you don't perhaps have time for everything. So if you have resources, that's one key. But then in Munifin, we give a margin discount for the clients. Every time when we finance something as green, it's going to be cheaper compared to normal funding. So that's an incentive for the clients as well.
I would like to ask, how did COVID or has COVID-19 affected sustainable investing in your business, or has it? Do you any quick changes due to COVID?
Well, difficult to say if it's a causality, but it seems like kind of realizing that the world is less safe than the thinking was before has probably increased the awareness of sustainability issues as well, and the problems the climate change may happen. So looks like it's increased. When I look at the flows to OP funds, certainly sustainable funds are on the top, and the climate fund is. But difficult to say if there is causality or if it's the kind of the general development of the whole sustainability thing. But there's a huge boom for long-term savings and through investing. At the same time, sustainability has gained ground in importance. So it seems like people's investments are quite a lot directed into sustainable things. And yeah, I would like to think that this COVID environment has made us think a little bit more than before. So maybe the causality comes from there. But I think it's more time, it's a good market, it's the sustainability in general that has made a difference as well.
Do you have some diagnosis?
I would actually echo that, and I think for Infranode as a long-term investor, there's a long-term commitment, and even though the pandemic and the COVID is a severe has a severe impact on people and the society, for the investment horizon it's still long-term. So and the need for solid infrastructure investments and financing is will not go away with sustainability as core to the process.
Thank you, Ulrika, Tuomas, and Antti. Our time is coming to an end, and it's really time to thank all the speakers, organizers, technical staff who made this event possible today, and especially you who joined us online. And this is only a beginning. I'm sure we will have a long journey ahead together to make the world even more greener, maybe dark green, as someone said, and more sustainable. Thank you for your company today.